Hello, everyone. Thanks for joining and welcome back to Wall Street Bullion. Our guest today is a very good friend, Clive Thompson. Clive has had over 47 years in career in trust and wealth management and Swiss private banking. Clive, welcome back.
Well, Ivan, thank you very much for having me back. It's been a chaotic month or week, I think.
Yeah, no, it's been a crazy month in the precious metals market, especially in the stock market as well. Like there's so many ups and downs and then downs and ups again. But I wanted to get you on to talk about everything that's happening right now in gold and silver in the stock market, tariffs as well. What are your thoughts on gold and silver right now? First, we hit new all-time highs as gold, and then we were getting up there to the 34, $35 mark for silver. We had a massive drop in the past few days, but now we're starting to climb back up again. What are your thoughts? What's going on? Is it tariffs?
Well, when we have an event, and I would call tariffs an event which destroys value, uh, everything has to go down. That includes gold and silver, and we did see that in the early stage of the event. Stock markets. If you look at Nasdaq now, it's down 20%, and the Dow Jones or the S&P 500 is down, I don't know, 14 or something percent. But how much is gold down? It's like probably less than 1% at the moment. So gold is holding up very, very well. I mean, it did have its dip, but it recovered fairly rapidly. And I
Right.
think what's going on here is that there are big buyers out there somewhere who are saying we're going to have some allocation or more allocation to gold than we had before. Whether that's central banks or private individuals, or maybe it's a big country, perhaps. I mean, I'm going to throw one out there. How about Canada, who has no gold?
Hopefully Canada is buying gold. That's where I live. If they're not buying gold, then they're not thinking straight.
Yeah, well, I don't know if they are. I mean, obviously there's no information that they are, but I was trying to think who is someone somewhere is taking delivery of high value bars out of COMEX, and so the speculation's been around. Is it the U.S. government? Is it the Chinese? Is it Berkshire Hathaway? There's obviously some hedge funds involved, but I'm thinking Canada, one of the best friends of the United States, is suddenly in a spat with the United States, and they're not sure if they can trust them anymore. So, now suddenly they're thinking, well, what are we doing holding all these US Treasury bonds? Is this the best thing? Shall we have some gold? I don't know. Maybe they're the gold buyer.
Yeah, no, absolutely. And a lot of people are talking about, the tariffs right now. Trump just put a 90-day pause on Canada and Mexico for the tariffs. He kept it on for China. It's a very high tariff, and then China came back and did an 84% tariff on all US goods and US trade. What are the repercussions of this? How will this affect the markets? Will this start raising prices of all goods from China? Like, what are your thoughts, Clive?
Well, let's talk about the Chinese tariff. I mean, one of the things which I think most Americans have not realized yet is not just the prices in Walmart and elsewhere where you're going to buy your Chinese-made goods that are going to go up. Huge numbers, huge numbers of American families buy stuff directly from China on websites like AliExpress, like Alibaba, and these Chinese websites where they're buying low value goods, which up until now have been able to enter the United States tariff free if the value was below 800 US dollars. Unless they've rescinded it, which I haven't seen that, but with immediate effect, there's going to be a 25, apart from the tariff itself, the import duty, there's going to be an extra $25 per packet added. And then from June, they're adding an extra $50 per packet. So if
Wow.
you've ordered a little toy for your child costing $5 or something, um, well, yes, you're going to have to pay the import duty, but you'll also have to pay an extra $50 on top. And I think that won't hit home to many Americans until they get their next packages from China and suddenly discover that they cost an awful lot more than they expected.
Yeah.
And I think people are not going to like that. It's hurting the man in the street who's been in the habit of buying cheap stuff overseas because for two reasons. One, you can get it delivered to your front door. You don't have to trips down to Walmart, which may or may not have what you want. And secondly, it's about as cheap as as you can get it, even with the postage.
And that will deter people from ordering from China. Like if I order something from Shein or Amazon that's in China and you're starting to see all these crazy fees, people in the West are going to be like, okay, well, we got to stop ordering from China.
Yeah, that's normal human people behavior. I
Right.
mean, whatever people think about whether China should be punished or not punished, the one thing they don't like to do is pay more, but they
Yeah.
will pay more.
Yeah, no, absolutely. Now, Clive, what's your biggest concern right now? Either whether it's geopolitical in the markets, is it bonds, is it treasuries? Like, what's your biggest concern right now?
You know, I'm hoping, and I don't expect that we'll go into some sort of Great Depression. I do think we'll have a recession. I, you know, we're going to see globally higher prices. I think central banks are going to look at those and say that's a one-off. It's not part of the underlying inflation, so it has to be disregarded. So we won't take into account the rising prices as part of our policy of keeping inflation down, because in a year's time, this one-off impact of higher tariffs and so forth will be out of the system. So, but obviously we are going to have all around the world people will lose their jobs due to the tariffs at both ends, both due to the American tariffs on foreign goods and the retaliations by foreign countries. I did a little calculation last night. I spent a long, long time of it. Switzerland, which is one of the many countries which has been accused of having a trade imbalance with the United States, I looked at the numbers. Switzerland is supporting slightly over 1 million jobs in the United States through its imports and its services, which it buys from the United States. And the
Okay.
United States is supporting slightly less than 1 million jobs in Switzerland through its goods imported. I think, it imports gold bars, it imports medicines and watches and all kinds of things and services from Switzerland. So USA has more jobs supported by Switzerland than Switzerland has supported by the USA. Yet I'm looking at that number, and where Switzerland is being accused of having a huge trade imbalance. But of course, what they're looking at is the imbalance in physical goods, because, in fact, it's true that America buys more physical Swiss goods than Switzerland buys physical American goods. But when you look at the services industry, Switzerland buys a lot more services out of the United States than America buys from Switzerland. So those two balance out. They both come to a very, very roughly $80 billion each in each direction. So now Switzerland hasn't imposed any retaliatory tariffs, but certainly it does mean that, and I take our country as an example, Switzerland, it does mean that some people are going to lose their jobs here because America will be importing less than they used to. And that applies to just about every country in the world. People in America are not going to pay higher prices if they don't have to. So they'll be looking around and seeing where they can buy. If there is a competing American product, they'll be looking around trying to find out where they can buy that competing product. And, that might come, and probably will come in some cases, from an American manufacturer. So yes, internally, it's going to be good for America up to a point, because some American businesses will be able to put up their prices because the demand will suddenly increase. But other American businesses will suffer greatly because most of what they make is imported from abroad. So
Right.
if you're manufacturing, if you're in the motor car industry or building computers or anything, you're buying components and stuff, or tractors, doesn't matter. Whatever you're buying components from all around the world. And as they come into the United States, they're going to cost you, the importer, a lot more. And that means that your profits will shrink. And some businesses will go out of business and some will report lower profits. And there'll be very, very few who will report higher profits because they make everything inside the United States, and the competing foreign product isn't coming in quite as much. So I think, in a way, we go to a situation where overall prices will rise, and over time people will lose their jobs. The unemployment rate, I think, will rise because of this, not only in the United States but globally, and that basically means we'll go into some sort of recession, and we'll see lower profits from companies around the world, and that will mean most likely lower equity prices for a while. As for gold and silver, a lot of we've seen how well it's held up in this recent market debacle. It's almost down
Right.
nothing. And I think that asset allocators are now looking at their portfolios. They're saying, as they do all the time, they're back testing the different asset allocations, and they're discovering when they do these back tests now, they're discovering that had they had some gold in the portfolio, it would have improved what's called the Sharpe ratio. The Sharpe ratio is a measure of risk and reward for a particular type of portfolio, whether it be a growth portfolio, a balanced portfolio, or a defensive portfolio. That you want to have the Sharpe ratio at the best level. So they'll find that adding gold to the portfolio will have improved the Sharpe ratio. It will, in other words, it will have reduced the volatility, and it will have increased the return.
Right.
So what's going to happen? Portfolio allocators will start to add a little bit of gold to portfolios going forward, and it won't take a lot of gold to push the price a lot higher.
Yeah, no, absolutely. What would be your advice right now for some as we're facing recession or a lot of people are saying we could possibly be in one right now, but as we're facing a recession, Clive, what would you give advice to all the new members on our channel or even all the new members in the world who are getting into silver and gold, who are getting into protecting their purchasing power and protecting their wealth? What advice would you give them, even like the youth watching?
Well, advice really has to be very personalized to the individual circumstances, but I can give you a few examples. Um, there are people whose jobs must be at risk. And these people probably need to be conserving cash in case they fall on hard times due to the uh, amount of imports going that if they're outside the United States and they're selling their goods or their company is selling goods into the United States, their job will be at risk because when companies' sales reduce, it's only a question of time before they start to cut back on the staff, maybe 10% less staff. And you never know if you're going to be one of them. So those sort of people whose jobs might be at risk need to be conserving cash so that they can see themselves through a rainy day until they get another job. But there will also be those people who've got a lot of surplus wealth, and now we're going into recession. Well, what should they do? Are they going to have an opportunity to buy things more cheaply? Can they buy
Right.
equities more cheaply? Can they buy business more cheaply? Can they buy property more cheaply? Can they buy gold more cheaply? This is a question. I mean, I think the way things go, we're seeing central banks buying more gold than ever, and the central banks literally do not care what price they pay. And the reason for that is central banks are saying, you know, look what's going on with the tariffs. Look what's going on with Mr. Trump. We don't know which way he's going to jump. We have been friends with the United States, and we still are friends with the United States. But now they're talking about maybe giving us 100-year bonds at low interest rates in place of the 10-year treasuries we've got. And we might find that we've got no choice but to accede to that if we want to continue to keep our friendship with the United States.
Right.
It might be pushed on us. So the need to have more treasuries, I think, is falling away, and the need to have something else, and obviously it's gold, is going up. So I think that probably gold is well supported around these levels. Yeah, whether it's the sort of 3,000 level or 3,000 or 2,500 level, or maybe it'll turn out to be a lot higher. I think it's well supported. So the risk is in my opinion less than, for example, holding equities where there's a long way down if they want to go down.
Yeah, no, you absolutely nailed it, Clive. Now, before you go, I really want people to connect with you. I'm going to put your links in the description below. Where could people connect with you, Clive?
So I only talk to people on LinkedIn in the direct messaging. I'm getting 20, 30 messages a day from people who've got all kinds of questions about whether it be how do I invest in an exchange traded fund, or what's the best gold share, or I've just inherited some money, what shall I do? I'm happy to answer all these questions generically without giving investment advice. But the way to get hold of me is look up Clive Thompson, Wealth Manager, or on LinkedIn. In Switzerland, you put in the word Switzerland if you get the wrong Clive Thompson, and you can write to me via direct messaging in LinkedIn, and I'll be happy to try and answer your question. I don't do any consultations on career. I know I get a lot of people writing to me saying, "I want to get into wealth management. How do I do it?" I don't really can't. I can't do that. I don't want to do that. But if you've got a question about your asset allocation, I won't give you investment advice, but I'll help you see if you are on the right track and maybe
Absolutely.
help you see what the right track is.
No, absolutely. It's such a huge pleasure, Clive, having you come down, speaking to the community, everyone watching. I highly recommend you go connect with Clive. And, as the market develops, and I know, we're going to have some really exciting stuff coming up in precious metals soon. We'd love to have you back on, Clive.
Ivan, thank you very much for having me on, and I hope that this is a big success for you.
Talk to you soon.
Cheers. Bye bye now.